Hey guys, welcome to my YouTube channel. And today I'm going to begin a series. I titled this series The Refined Series. And what the series is going to do is it's going to guide you in your trading journey from the beginner's level to the expert level. And I know many of you have been asking yourself, how am I going to go about learning the trading skill in the year 2026? I want you to know that your answers have just arrived. So today we're going to start with talking about the beginner's guide for trading. The first question on the list is, what is trading? Trading is basically buying and selling. That's all we do in this market. We buy and we sell. The question is, what do we buy and sell? Okay, so we buy stocks, we buy crypto, and all of that. I personally am a an index futures trader and also trade cryptos as well. But very rarely I do that. So here on your screen is a list of things you could buy, and these are assets you could buy. So we have the stock assets, Tesla, we have Apple's, we have Amazon, we have Nvidia, we have Meta, we have Microsoft Corporation, and here we have funds. We have Invesco QQQ Trust Series. I don't even know what that is, to be honest. We have the futures, the mini Nasdaq futures, the mini S&P 500 futures. We have Forex. This is like the most saturated market in the world, the Forex market. A lot of traders go here. I began as a Forex trader, but later I pivoted back to the futures. If you want to know why I've pivoted to futures, comment below. We have crypto, we have the BTC, the US, the Ethereum, the SROP, the BNB. You know, many of you are familiar already with this. We have the indices. We have S&P 500, US dollar currency index, Bitcoin all-time history index, and all of that. I don't play around here. We have bonds, the United States 10-year government bonds yields, Germany, different bond yields of different countries. Okay, we have economy, effective federal funds rate, United States interest rate, United States inflation rate, unemployment rate. You could actually trade all of this, right? You could actually buy and sell all of this. We have options, and you know the list goes on. And the next question is, why do we trade? We trade to make money. We are not here to be the best, the perfect analyst or strategist, to be the one with the best strategy. We are just here on a mission. And the mission is simple: to make money. So if you've seen posts or people talking about learn the strategy or you will fail, it's a lie. There are so many strategies in the market. What I'm going to be doing in the refined series is guiding your thoughts, and hopefully you would learn to create your own model. We have a lot of resources for that. And as well, I'm going to teach my own personal one-stop model at the end of this series. And I'm going to show you how it is applied, how I apply it to my charts. If you go to my previous YouTube videos, you will see some execution videos of the one-stop model. The next question is, where do we trade, right? We have brokers, and these brokers help us trade. What do they do? They are the middlemen, right? When we send in our orders, let's say I want to send in a buy order, the brokers fill in my order, and when I want to close my trade, the broker fills in my order as well. We have the trading view layout, which basically helps us to analyze the market. It's a software that gives us great tools for analysis. In my early days in trading, when I go over my mentors, my father's mentorship videos, and when I talk about my father, I mean ICT, the inner circle trader. He was using MT5 at the time. So MT5 is another substitute platform for this. But you see, TradingView gives you a clearer, better user experience and user interface. And you can use TradingView to analyze your markets. And just in case you are wondering, when I talked about brokers, this is basically what I'm talking about. These are brokers. Paper trading, no, this is for paper trade and for basically for demo trades. If you look at my previous videos, you'll see when I use this to trade to give an insight of what I'm doing in real time. We have Trade Nation, Gate, BingeX, Capital.com, Whitebit. All of these are all brokers, and you can use anyone that is compatible with your locality because some of these brokers don't are restricted to a particular nation or country, you know. So you just that's basically it. So we use brokers to trade, to buy and sell in the market. Just like a traditional market in your, by your corner in your street. What you do there, you go there, you buy and you sell, right? People sell, people are willing to sell, and you are willing to buy. That is the same thing that happens in this market. So it's not something mysterious. And you might be wondering, what is this on your screen? Like these black and white things. These things are called candlesticks. These things are called candlesticks. And what they basically do for us is that they interpret the real time market data on the charts for us. It gives us specific details of what is going on in the market at different times. And when I talk about different times, that leads me to what I call time frames. So we have the 1 minute time frame, we have the seconds time frame, right? The minute time frame, the hourly time frame, the hours time frames, the days time frames, and all of that. The monthly time frames. So currently I'm on the weekly time frame. And on this time frame, every candlestick you see here represents each week. So this is Monday, 7th of April, 2025 weekly candle. And this weekly candle will stop forming on Friday of that week, 16 o'clock New York time. And if I drop down to the daily time frame, every candlestick you see here represents each day. Today's candlestick is currently forming and is going to stop forming at 12 hours 21 minutes. So we have the 4 hour time frame, and this basically represents every candlestick you see here basically represents the 4 hour of each day, each 4 hours of each day. Okay, so that's what basically this is here. So we have here your x-axis or your y-axis for time, and we have the x-axis for price. Market moves when time and price aligns. So let's do a little bit of candlesticks anatomy. So what makes up a candlestick? Because this is an important concept that will guide you all through your trading journey. These things you're seeing on your charts are not mysterious. I basically used two different colors to distinguish between the two types of candlesticks. And we have two major types of candlesticks. We have the bearish candlestick, right? we have the bullish candlestick, right? So basically, the bearish candlestick represents when the market is in a downtrend. So we have bullish trends in the market. I will talk about that when we are discussing market structure in our next video. So this bearish candlestick has an anatomy which is this. It opens, trades high, trades low, and closes. That's for the bearish candlestick. For the bullish candlesticks, opens, trades low, trade higher, and closes. So I'm going to describe this with a diagram. So this is for the bearish candlestick. Market opens, trades high, trades low, and closes. And for the bullish candlestick, market trades low, opens, trades low, trades high, and closes. Open, high, low, close. Open, low, high, close. So let me explain this using an example. So this is a 4-hour candle, or let's go to the daily time frame. Let's just use the 4 hour because of time. So this 4-hour candle opens up at 10 o'clock and closes at 14 o'clock. And this was Friday, 2nd of January 2026, 4-hour candle. And this candle opened at 10 o'clock and closed at 14 o'clock. That is 4-hour interval. And the opening price for this candle, and I want you to pay attention to this, to the details here. The opening price for this candle was 25,561.0. So we note that 25,565.0. Okay, 561.0. It traded high up to 25,607.2. 25,607.2. Traded low to 25,523. Okay, no. Low to 25,095.1. 25,095.1. And closed at 25,124.3. 25,124.3. You could see from the the visuals here that price opened, traded high, traded low, and closed. The difference between the opening price and the closing price will tell you if it was a bullish candle or not. So you can see that the opening price is higher than the closing price. Okay, so that means on the 2nd of January 2026, this 4-hour candle opened at 10 o'clock at this price and closed at 14 o'clock at this price. That means price traded low. This high might have been put in the first 1 hour of the 4-hour candle, or the first 2 hours of the 4-hour candle, right? And then traded low, trading this whole body and closed here. So let us get another example for the bullish candle. We are going to use this here. So this opened at 25,124.8. 25,124.8. Traded low to 25,118.6. 25,118.6. And then traded high to 25,286.6. 25,286.6. And closed at 25,222.8. 25,222.8. So this is just the basic anatomy of a bearish and a bullish candlestick. Okay, so this is going to be presented with this image as well. So I'm going to use the red because of when you open a new trading view account, this is going to be the default color. I only changed it on like using my settings. Okay, so you want to pay attention to this detail. So this is just basically what you're seeing on this on your screen. These candlesticks are just basically represented using this, right? So it tells you, it gives you the sum up data of what is currently going on in the market in real time. In real time. And this is relative to the time frame you're looking at. So the daily time frame, it will be different from the 4 hour time frame and will be different from the 1 hour time frame. Right. So why is this useful? In the market, we want to be buying in a bullish trend and we want to be selling in the bearish trend. And we'll talk about market structures in our next video, where I will explain what a bullish trend and a bearish trend is all about. And this is just the basics of trading. So within this 4 hour candle, we want to find opportunities to short from this high to this low. We want to find opportunities to short from this high to this low. Or we want to take our profits within the body of this candle, right? And we want to buy from this low and take our profits, right, within the bodies, within the within the body of this 4 hour of this candle, relative to the time frame you're looking at. So if this is a daily time frame, we'll basically see price open here, maybe Monday, Tuesday, put on the high, Wednesday, Thursday, Friday, put on the body of the candle and closes on Friday. This is a weekly, that is a weekly candlestick. And for a daily, we want to say maybe price open up in, okay, not maybe, price opens up in the Asian session. Basically, we want to see price put on the high during the London session, and then maybe the New York session gives us this full body, and then we close during the New York PM session. This is not a standard procedure. I'm just giving a hindsight example. And for the session, we want maybe session candlestick, which is basically the 4 hour, 6 hour candles. The first 1 2 hours, your first 90 minutes or first two 90 minutes put on the high, and the rest of the time, put on the full body of the candle, and we close. The same thing for the yearly quarter is going to be price opening up, let's say month January, February, March, putting up the high, April, May, June, July, August, September, maybe putting on the full body, and then we have August, September, November, December, putting on the rest of the. So this is relative to the time frame you're looking at. The time frame you're looking at. So we want to be buying below lows, close to the open of the candlestick, and we want to close before the close of the candlestick, or maybe ride it to the next candlestick open, depending on the kind of trader you are. And for this bearish candlestick, you want to be buying at the open of the candlestick, which is a high, and close your trade within the body of the candle, right? Or hold it to the next open of the candle if you're the kind of trader you are. Whatever decision you take in the market will be up to you. But this is just the basic mechanics of the market. And with this we come to the end of this class. I've already set up a an outline of what we're going to be discussing throughout this series, so you don't want to miss any of it, because every video is going to be linking to the next video, and you don't want to skip anyone, especially if you're a beginner and you know nothing about the market. This is your best place to be. You can join my Telegram channel. The link is below in the description. And you can follow me on X. The link will be below in the description as well. You want to like, comment. That is all I'm asking. This is all I'm asking from you. You're not paying me a dime to learn this. You're just doing these basic things for me. Sharing it to your friends and loved ones who would want to join in this series and learn how to trade like a pro from the beginners level to the expert level. And all this will be done on this YouTube channel. Watch out for the space. Till our next video, goodbye and happy trading.